So, to invest or not to invest? All of what we've discussed leads to a mixed forecast for OCI in the short term, but a relatively favorable one in the long term. Let's see what the market thinks. At the end of 2011, OCI was trading at just over 200 Egyptian pounds. The price has increased to 251 as of 3 days ago, up 25% for the year, but it's still down from its 2012 peak of 305 pounds. OCI's price-to-earnings ratio has been fluctuating during the past 4 years, dropping from 21.27 in 2009 to 10.24 at the end of 2011. It was back to 18.24 as of December 19th. The current PE ratio of the EGX30 index is a much lower 10.46, and only 9.25 for the construction and materials sector. What we're seeing is a flight to quality. In other words, the market values OCI's future earnings potential at almost twice the average for its sector, and about 80% more than the index as a whole. The company's dividend policy is also important currently and historically. For the first time since 1999, management has opted to conserve cash by not paying a dividend in 2012. However, OCI has an excellent dividend-paying history and a demonstrated commitment to increasing shareholder value. For instance, most of the £60 billion in profits from the 2007 gain on sale to Lafarge were returned immediately to investors in 2007 and 08. The dividend yield still hovered around 6% in 2010 and 2011, which is quite generous. As we mentioned before, the dividend payout ratio has decreased recently, from 85.6% in 2009 to 63.6% in 2011, which is still relatively high. These numbers are somewhat deceptive, though. In fact, the yearly dividend remained constant, while net income increased. The decision to suspend dividends in 2012 was necessary to conserve cash during a period of uncertainty. Given OCI's history, we expect dividends to return to recent levels once the way forward is more clear. The EGX30 has had a wild ride this year as well, currently up about 49%. Not surprisingly, the index has moved in tandem with the political events of the last year, losing around 20% in June during the presidential elections, then gaining 50% from trough to peak afterwards with the promise of stability, and recently suffering another 20% pullback during the constitutional crisis. OCI has roughly mirrored the broader market, though it has fallen behind in recent months. Conventional wisdom might suggest that the current PE ratio is too high of an entry point relative to the broader market and the sector PE. However, given OCI's dominance in both of its main sectors, and its healthy 2011-2012 performance outside of Egypt, we believe a PE of 18.24 is more than justified. Plenty of uncertainty is priced into the stock already. If the uncertainty is removed, investors will surely become more confident. The beta for OCI stock has been about 1.06 over the past 3 years, as compared to the EGX30. This means that the stock very closely matches the volatility of the market. While a stock with a higher beta would tend to jump more after good news, we do expect OCI to move back in line with the EGX30 if some of the current difficulties pass soon. In fact, OCI has a substantial effect on the market as a whole. Its market capitalization, at £52.5 billion, represents about 14% of the total market cap of the EGX30. What is good for Orascom is good for the EGX30. Investors should take note of Egypt's young and growing population and good GDP growth prospects across the Middle East over the next decade. OCI is already an industry leader by the numbers, as we saw in our comparison with other companies and the broader construction industry. Warren Buffett would say that there is a moat around OCI's businesses, due to its tangible and intangible strengths and favorable market characteristics. OCI will continue to be one of the most successful companies in Egypt in the medium to long term. We would rather pay for quality than take a chance on many of OCI's competitors who have bled cash in the past year. Some of these competitors may even be targets for takeover bids from OCI if their troubles continue. Despite the threats to operations within the country, OCI's backlog of large construction projects stood at 39 billion Egyptian pounds at the end of 2011, up 14.29% over 2010. In fact, the fourth quarter of 2011 brought greater increase in new orders than in any quarter since 2008. Despite the current political situation, analysts expect an average of £21 billion in new project awards in 2012 and 2013. We believe that governments and global private partners will rely on OCI for many of its large infrastructure projects in the next few years, given OCI's efficiency, local expertise, and proven track record. The company has also proven their strategy of geographical diversification. Growth in the broader Middle East and an investment from abroad will continue to flow to OCI no matter what. Orascom was recently awarded the new Grand Egyptian Museum project, worth almost £5 billion, and a number of key infrastructure projects across the Middle East. There's also the potential for nuclear power, and even the long-discussed bridge to Saudi Arabia, a project potentially worth over £18 billion. For Orascom and for the interested investor, we believe the sky is the limit. Thank you very much.